to GenAI 93940 lab. We're going to be using ChatGPT to identify drivers of income statement variances between two quarters. So this lab is essentially going to demonstrate how GenAI can assist accountants in comparing income statements and in identifying why financial performance changed between quarters, so that especially visually, it's going to compare quarter one and quarter two. And this is going to make it a lot more efficient to find and interpret the underlying causes of those changes and hopefully ultimately help to gain information and clear insights for decision making and for budget allocation and operational improvement or whatever company that may be. For ours, we just have our lab data, the GenAI here. I can try to show all of it. So yes, here's that data. Here's how that looked like. So it's an income statement that includes quarter one and quarter two. And we're going to go ahead and start. So this isn't necessary since this is a new prompt, but just in case, I do like to say start a new chat, just so it's cleared. Perfect. Okay, and now we're going to upload that lab data. There we go. Okay. Perfect, we got that uploaded, and next we're going to calculate the dollar and percentage variances between quarter one and quarter two for every income statement line item, and we're going to ask it to highlight the top 5 largest variances so we can focus our attention on those. I'm just going to copy and paste from that lab data instructions. Perfect. So it's going to give us how it found that dollar variance and that percentage variance. And then, of course, it's going to give us those top 5 largest variances. So it's found between the total revenues, the net sales, the cost of sales, other gains and losses, and then income before and income taxes. So we don't have that much in the income statement, but of course if we had larger data sets I would revise it so it just focuses on those things inside the revenues and inside the expenses, so it gets more specific. But we're just going to continue. And we're going to ask it to summarize which categories contributed positively and which contributed negatively to the change in the net income. So that's going to show us, and like I said, we can modify it so it gets more specific if you're looking at a specific company, but since we're just using a simple income statement, this will do. And then we're going to ask it to explain why the largest variances occurred and state possible drivers such as pricing, volume changes, seasonal effects, and cost fluctuations. Or if it was just a one-time transaction. Of course, if it had more data, that would be more accurate, but this is why we're going to state possible drivers, because we know that this would just give us an idea of maybe where to look. Perfect. And this is just, overall bigger picture. So it says like total revenue, net sales, cost of sales. And then it's going to give us those ideas for the possible drivers of why revenue could have decreased. And it says that it seems that there's lower sales volumes. Same with net sales also decreased. And then the cost of sales decreased. And yeah, we just looked through those. and it seems that the income before income taxes increased this quarter, even though revenues fell. So, perfect. Okay, and then we're gonna go straight into the visuals. So we're gonna ask it to create a visual variance analysis showing how each line item contributed to the change in net income from quarter 1 to quarter 2. And we're gonna ask to state key variances that we should further investigate. Okay. So we're gonna ask it one more time again. We're going to ask it to create a visual variance analysis showing how each line item contributed to the change in net income from quarter 1 to quarter 2.